Good afternoon, everyone. This is Market Fatafat. I'm Avan Dabash. With me is Motiwala, and we've got lots lined up for you today on the show as we run you through all the buzzers in today's trading session and what's trending on the charts. But first up, a look at the equity markets, and it's softened out for the markets as we speak, but currently hovering around the 18,361 mark. The Sensex as well is in the red. And yes, yesterday there was a lot of furor when it came to the Nifty Bank. Today, though, it's softened out around the 44,034 mark in the session. The breadth still skewed in favor of the gaining side, and let's take you through some of the winners. Hudco is gaining traction in trade this afternoon. A nice 8.5% notch up is what you're seeing on the stock. There's Mazgaon Dock as well. That's a buzz in trade. Birla Soft continues its up move. Astral as well reacting to its numbers. Aurobindo Pharma, something like a New India Assurance, they as well are smart movers in trade. Take a look at Zensar Tech, though, declining about 7.5%. Adani Transmission down 3%. Torrent Pharma at about 1,615 rupees is slumping about 3% in trade. And Berger Paints, along with PVR Inox, reeling on the back of their quarterly numbers. So that's really the market setup.
That's the market setup, but let's start with all the stocks that are buzzing in trade either on the back of news flows or on the back of technicals as well. On the technicals, today we're joined by Kunal Bothra, while from the research team we have Vamakshi as well as Lisa joining in with us. A very good afternoon to all three of you all, and I will start with the first stock that we're going to talk about today, that is Saregama. Now, what has actually happened is Saregama management met with Nuvama, and we have some highlights that have come in from this meet post Nuvama, and they're highlighting that each year the content in terms of the value is of around rupees 800 crores that is made available. Furthermore, the highlight coming in is that the company is aiming to seize 25 to 30% of the market for incremental content. Whether it acquires music, it will be impacting it in terms of, and will be visible, the impact of that will be visible 12 to 18 months down the line. Also, the management is guiding a low marketing expense for a few quarters and focusing on natural demand pull till the sales volume grows sharply. Also, the latest variant of the Caravan is at a lower price point, and which is aiding them to penetrate further in the smaller markets. Management has also indicated a big budget film music release in FY24 as well. So yes, we're seeing the stock is showing some bit of an up move there, up 0.6% in trade.
Time to move on then to a stock that's really having a terrific run-up in today's trading session. I'm talking about Astral Poly. In fact, it's been nothing short of an impressive set of numbers all around. The company has reported a historical high revenue and EBITDA for both plumbing and adhesives in the paint segment. That's taken the total revenues to about 1,506 crore rupees. The EBITDA margin stands at a healthy 20.5%, and the company has reported an EBITDA high by 42.5% at 309 crore rupees. The FY23 total volumes have come in at a historical high, growing 19%. Adhesives and paint margins have seen recovery on account of easing raw material prices. And the company as well has spoken about robust demand in the southern market, their Bhubaneswar plant gearing up to be operational, their greenfield plant in Hyderabad, as well as their long-term plans of investments that will be completed in a phased manner for capacity expansion by FY26. 1707 on Astral.
Okay. Let's actually look at the numbers that are flashing on your screen, and Bank of Baroda has come out with their numbers. When you're looking at the profits of the company, we're seeing a sharp growth coming in over there. I think the profits are at 4,775 crores versus just 1,779 crores on a year-on-year basis, a sharp jump in terms of the profits of the company. Let's look at the GNPS asset quality of the company, seeing an improvement. Gross non-performing assets at 3.79% versus 4.53% on a quarter-on-quarter basis. So we're clearly seeing an improvement, I think, even in the asset quality of the company as well. Other than that, the operating profits are coming in at 8,073 crores versus 5,635 crores, a jump of 43% on a year-on-year basis, though sequentially that number has seen a bit of a reduction. Let's keep an eye out on what the provisions is at for the company. On a quarter-on-quarter basis, a decline of 41% in terms of the provisions. Provisions at 1,421 crores. NII standing in and coming in at 11,525 crores. Surely you've seen that spike coming in. Asset quality, a big plus in terms of improvement coming in over there for the company now.
All right, that's Bank of Baroda coming out with its quarterly performance and the stock duly reacting. Keep an eye out at the bottom of your screens as well, as we'll get you more updates on the numbers. But from one bank to another, and let's discuss ICICI Bank. And Kunal, you're flagging this stock off on the charts. You're pretty confident of a breakout, right? So what levels can we expect from the current Nifty?
Yeah, so I think the stock has performed quite well in the last 2-3 months. ICICI Bank has recovered from 850 levels to now 940 thereabouts, where the stock is trading. It's I think 1% or 0.5% away from its previous major highs in the month of December 2022, and also I think that could probably earmark a lifetime high breakout for ICICI Bank. So momentum is quite strong for the entire banking index. ICICI Bank is one of the stock which I believe is heading towards a classical breakout. There is a triangular pattern which is formed for the stock on the hourly charts, and that pattern height is could ideally take the stock back towards 980 to 1000 levels. So I'm expecting that this time around, when ICICI Bank gets into that breakout mode, the stock can even cross as well as surpass the 4-digit mark. So bullish on ICICI Bank and expecting 1000 plus as an immediate target.
That's ICICI Bank for y'all. Keep an eye out on the target price for that as well. Let's move on and talk about Berger Paints, Lisa. In terms of numbers, I believe it was a weakness there. But what is the commentary? How are you reading the numbers coming in?
Yes, Vinny, it's on the back of results, and Berger has reported a good set of numbers when it comes to revenue. They reported 11% year-on-year increase, and that is on the back of double-digit volume growth in its decorative business. But however, they faltered on the net profit. They reported a 16% decline in the net profit, and the net profit stood at around 186 crore, and that was owing to a loss from the fire incident at its Goa plant. Even the EBITDA margin, that was down at 15.09% versus 15.8% seen last year. Well, on the outlook, the management is quite bullish about the outlook going forward. They say that the double-digit growth in the decorative business, that is expected to continue going forward. And also they say that lower inflation and prediction of a good monsoon, that is expected to lead to good demand, and also the operating margin is expected to see good profitability in Q1 FY24. Also the industrial sales outlook, that looks good on the back of upturn in the auto as well as the infrastructure segment. A brokerage, Macquarie, has come out with a report on Berger Paints, and they sound bearish on the stock because they have maintained underperform on the stock while hiking the target price to 510 from 480. But they say that the slower sales compared to the Asian Paints, that and also Grasson's entry, that is a concern for Berger Paints. So well, we can see Berger Paints feeling under pressure in today's trading session.
All right, let's move right on away from Berger Paints and discuss Tube Investments. Vamakshi, why is this stock trending?
Well, Avan, the stock is trending on the back of its numbers. A strong set coming in for Tube Investments. When we look at the revenue, that did go up by almost 12% on a year-on-year basis. Revenue came in at 3,656 crores. Now, moving on to the EBITDA, that is seeing a sharp uptick of almost 68% on a year-on-year basis. 372 crores is where the EBITDA is at. The net profit at 311 crores, an uptick of almost 74% on a year-on-year basis. Not surprisingly, the margins have also seen an uptick, a very good uptick of, it was at 6.8% in the same quarter last year, and it has now gone up to almost 10%. In fact, the board has also gone ahead and approved the long-term borrowing plan of almost 300 crores by way of term loans and as well as NCDs. Apart from that, the management also commented that the bicycle industry continues to suffer from contraction in demand. The bicycle business are working towards cost reduction and improving operational efficiency. The subsidiaries also have registered strong performance and delivered strong results across segments. Now, that is the reason why Tube Investments is actually in focus, up nearly 3% as we speak.
Let's move on and shift focus to an FMCG major. Kunal, HUL is making your list. Should we start expecting a good up move from this one now, finally?
So look at it this way, the entire FMCG sector made a new high for itself a few weeks back. Many of the other large cap FMCG names, Nestle, Britannia, etc., the stocks did exceptionally well, but HUL was languishing behind. Now the stock is playing a very good catch up. This month so far, the stock is up 8.5%, and this is a very rare kind of a phenomena for a stock like HUL, which means clearly that the stock is playing a catch up with most of the other peers in the FMCG pack. I believe that the stock could also get into a breakout mode and break past about the previous major highs of 2,800 approximately, which means traders who are looking at buying the stock and probably expecting that maybe the rally could be over for the stock, I would sense that the rally should see more upside for HUL and a breakout potentially above the 2,800 mark could also be possible over the near term.
Let's move on and talk about Vesuvius India, and this one is also on the back of its numbers. When you look at the net sales of the company, they have seen a growth of around 18% coming in on a year-on-year basis. What is the main reason for this? By better demand in the steel and cement space is something that is aiding the growth. Even when you're comparing in terms of the EBITDA performance also of the company, that has also seen a very good growth in that, 65% growth on a year-on-year basis, 39% growth quarter-on-quarter basis as well. Margin seeing a 400 basis point expansion, I beg your pardon, on a year-on-year basis, coming in at 15%. Other than that, the other income has also seen a very sharp growth of 102%. Let's not forget, in terms of going forward, Vesuvius seems to be quite well placed in terms to capture the domestic market share through focus on localized manufacturing and new product launches, driving faster growth. And additionally, the higher steel production and technology advancement is expected to further drive the refactories demand for the company. The company is focused on capturing their domestic market share, and revenue growth has been quite strong, aided by the good demand, and that is leading to a good up move. And obviously, the stock is locked in upper circuit as of now.
All right, let's shift gears then and talk numbers, discuss Coromandel International's quarterly performance. It came out yesterday post-market hours, and the company has seen their Q4 profits, that is down about 14% on a year-on-year basis, and the margins as well have, so the profit has come in at about 246 crore rupees. In fact, the EBITDA margin is at about 7.4% versus 9%, and revenues have come in higher by nearly 30%, 5,476 crores. The operational performance is well steady, with EBITDA standing at about 403 crore rupees. 974 is where the stock is at.
Okay, let's move on and talk about Delta Corp then. Kunal, on the charts, how is this one looking like? Would you say it's the right time to enter Delta Corp?
Well, the stock was a huge underperformer. I remember, I think in 2022 second half as well as 2023 start, the stock went into a very sharp selling. It came down to as low as I think 173.74, where it made a major bottom for itself. The stock used to struggle holding onto that 200 mark. In fact, 218 was a major resistance for Delta Corp. But in the last 3-4 days, with the momentum speeding up for the stock, it's managed to break past about these two levels, 200 as well as 218. And interestingly, the stock has not gone into the F&O ban, which has been a typical phenomena for Delta Corp over the last so many days. So many months. So I think in that regards, it's a stock which looks attractive, confirming a breakout of two important resistances. I think now 218 could be kept as a base for Delta Corp, and traders could look at a fresh buy even at current levels. Till the time the stock doesn't break below the 218 mark, there could be a high probability that 240, 250 could be targets which could be achieved by the stock.
Delta Corp, it is a buzz in today's trading session. Moving right on then, let's discuss some of the other newsmakers. And Lisa, it's Suryoday Small Finance Bank.
Yes, a good set of numbers. One coming from Suryoday Small Finance. They reported a net profit of 39 crore versus a net loss of around 48 crore last year, and that was driven by net interest income and also fall in the loan loss provision. Well, talking about the parameters, the net interest income that rose 43% year-on-year basis and stood at 210 crore, while the net interest margin that improved at 10.4% versus 7.8% last year. GNPAs also that improved to 3.13% versus 4.28% last year. And the bank also, the management also gave good commentary on the outlook. They said that they are focusing on growing the gross advances by around 30% and also the deposits by around 35%. So like as we speak, the stock is up around 3.8%, and no wonder on the back of good set of numbers, the stock is in positive territory today.
Okay, let's pull up the charts for Bharti Airtel. This one will be reporting its numbers today. Mamakshi, what are we expecting in terms of the numbers?
Well, when you look at the numbers, the revenue is expected to come in nearly 2.5% higher at 36,744 crores. The EBITDA is also expected to go up by almost 2.5% to 18,887 crores. The margin, however, are expected to see a slight bit of contraction from from 51.5% to 51.4%. But the net profit is actually expected to see an uptick of almost 81% on a consolidated quarter-on-quarter basis to 2,881 crores. Now, the India mobile revenue growth, as we saw, is the slowest in the last 10 quarters in absence of broad-based tariff hike. EBITDA growth is expected to mainly come in from marginally higher ARPU and subscriber base. ARPU growth is also expected to come in from the hike in minimum recharge plans. Now, apart from this, some of the important factors that we will be keeping an eye out would be the commentary on timing of the mobile tariff hikes, the 5G rollout, early emerging trends from the initial 5G rollout, the capex intensity, as well as the traction that they are seeing in the home broadband, as well as other new initiatives. So that was Bharti Airtel for you in focus ahead of its results. As of now, it is declining in trade today, down 0.9%.
All right, let's move right on then. And Kunal, discuss IndusInd Bank. You're clearly tracking a lot of these frontline banking names.
Well, yes, IndusInd Bank has been one of the recommendations which I had flagged off in mid-2022. After a range bound or a consolidative kind of an action, the stock has made a very good comeback. So again, as I said, that most of the banking stocks have started to get into the groove in the last few weeks, and especially the large cap private sector banking names. So is the case with IndusInd Bank, the stock breaking past about 1200 mark. It's yet to confirm a breakout about the 52-week highs. I think 1240.50 is the previous highs for IndusInd Bank. But I believe with this momentum and the strength in the banking index, it could just be a matter of time that IndusInd Bank can also provide a breakout on the upside. So bullish on many of the banking names, private sector banks as well as the formidable ones. IndusInd Bank also is one of the top candidates over there, expecting an up move to almost 1300, 1350 post the breakout of 1250 mark.
Keep an eye out on those levels for IndusInd Bank. Let's move on and talk about some of these life insurance names, whether like an SBI Life, Max Financial also as well. And what we're seeing coming in as CLSA has come out with a note on these life insurance companies. They believe that the product mix improvement is nearly complete and margins should start plateauing now. High FY23 base means FY24 is likely to be a tough year, maybe coming in for these companies. Though SBI Life remains among the top picks in the sector for CLSA, while Max Financials is a good option in terms of a strong upside if the promoters and distributors related to the concerns over there are addressed properly. So yes, on the back of this, we're keeping an eye out on the life insurance names this afternoon.
All right, let's move right on then and discuss the next newsmaker, and that's PCBL in the spotlight. Rajji, on the back of numbers yet again. Revenues have come in at about 1,374 crores. That's up about 12.7% on a year-on-year basis. The company has reported a net profit of 102 crores versus 88 crores last year. EBITDA margins stand at a healthy 13.4%. That's up nearly 236 basis points from last year's 11%, with the EBITDA coming in at 184 crore rupees. That's higher by about 37% on here. The stock, though, has plateaued out after a decent start and now just about nudging the 130 mark.
Okay, that is PCBL. But let's talk about a pharma name, and Aurobindo Pharma, Kunal. What should we be looking in terms of the charts for this one, the target price for this one? Will this also see a good up move in the pharma space now?
So the fourth consecutive month for Aurobindo Pharma where the stock is seeing an uptrend from 400 levels 4 months back. The stock is now at 600 plus mark. In fact, it's nearing the breakout of even 650 levels. So it's been a stellar 50, 55%, 60% recovery for Aurobindo Pharma from the 4 month back lows for itself. So that generally, that strongly indicates the change of trend and the change of texture for the stock with respect to the entire pharma sector. Now, today's move is very interesting because it comes after a bit of a consolidation. So the last 2-3 days, the stock was getting into a bit of a range bound action where it was struggling to break past about the 625 mark. But today's range bound breakout indicates that the stock may move up higher by at least another 15 to 20 points from current levels. So 660, 665 could be a potential target range for Aurobindo Pharma for traders who are looking at a slight high beta as well as a breakout trade on the pharma pack.
A breakout trade on the pharma pack. That's Aurobindo Pharma quoting at about 645. Let's move right on then, and clearly it seems, Vinny, that the spate of flops in Hindi movies is not working out well for Inox, PVR Inox, Lisa.
Yes, PVR Inox is bleeding in today's session, and in fact, it has touched its 52-week low today at 1408.50, and the stock was down 4% in early morning trade, and that is on the back of a weak set of results. Well, this is the first result after the PVR Inox merger, which took place last quarter. And though the revenue was up, it stood at around 1,043 crore versus 536 crore, but that was on the back of a low base effect. Remember the Omicron impact which was there last year. But what was impacted was the net loss. That the net loss widened 3 times and stood at around 333 crore versus 105 odd crore last year, and that was on the back of one-off. The exceptional items that were undertaken was the impairment of the capital work in progress. Also, they are shutting down 50 screens in the next 6 months, and that is because the life cycle has ended for some of the malls. So they have taken accelerated depreciation for that, and also merger-related expenses and deferred tax write-off. So that has impacted the net loss, and the street was expecting a lower net loss for PVR Inox. So, well, as we can see that the stock is reeling under pressure, and though it has recovered, but it's negative territory as we speak.
Okay, let's move on and pull up the charts for Coforge. And Kunal, on the charts, how is this one now looking like? Because given that the lows that we saw coming in of around 3,500, we are surely seeing a recovery coming in there. Is there any pattern that is indicating of an up move, or maybe a correction is what we're expecting here now?
So there are two patterns on prices. One is a swing breakout, which means that the stock has crossed the previous nearest resistance around the 4,200 levels, 4,180 to be precise. And the second is a bullish flag pattern which has been formed for Coforge on the daily charts. So both these patterns have been broken out. This is almost a 350 to 400 point pattern for Coforge, and the breakout point is just around that 4,200 levels, which means we can expect at least another 300 to 350 points upside for the stock from that breakout zone. So looks attractive. Very few of the mid-cap IT names are showing such kind of consistency as well as positive price patterns for themselves. Coforge is one of them.
Okay, there you have it. That's the word coming in on Coforge. Meantime, let's move right on then and discuss another stock. And Vamakshi, why is Paras Defense in the spotlight?
Well, Avan, this stock is grabbing headlines after the company announced that it has signed a memorandum of understanding, that is an MOU, with Society of Applied Microwave Electronics Engineering Research. Now, this is an autonomous R&D laboratory under the Ministry of Electronics and Information Technology, and the objective of this MOU is actually to work together, fulfill the needs of indigenous design, development and manufacturing of various technologies. Now, after this announcement came in, we did see the stock pick up and trade. It did climb to a high, and as of now, it is trading close to the day's highest point, up nearly 2.5% on the back of this news flow.
Okay, that's Paras Defense for you all buzzing in trade today. But Ashwini Agarwal, founder of Demeter Advisor, is positive in the manufacturing space, especially the autos and the pharmaceuticals. He also believes that the manufacturing space may see a re-rating on the tailwinds to the margins. Let's go across and listen into his views.
Within sectors, I think manufacturing is what I'm quite positive about, and within that, autos and pharmaceuticals in particular, because you will see a significant tailwind to margins from normalizing raw material costs. I think it's already visible in the March quarter numbers, but I think as that factor continues to drive earnings over the next year or so, you might see re-rating in these sectors, because these sectors haven't really done as well as defense-related manufacturing has, for example, where I think valuations are starting to become quite stretched. So I think, over the last 1 year, it's been railways and defense-related manufacturing that has helped. I think consumer-oriented manufacturing would be significantly positive.
Let's move on. At stock number 20, we have an earnings candidate again, and that is Granules. They reported the number a short while ago, and we saw a sharp spike coming in the stock price as well. Now, in terms of the revenues that have come in for the company, it's a 16% growth on a year-on-year basis. What we're seeing, the revenues are at 1,196 crores. The net profits of the company also have seen a growth of around 8%. While in terms of the operating performance, a good operating performance coming in there as well. EBITDA seeing a growth of around 18.5% at 228 crores. while the EBITDA margin seen an expansion of 40 basis point approximately 19.1% versus 18.7%. So yes, a good set of numbers has come in from Granules India. We've seen that spike in the stock price as well, up 2.4% as we speak as of now. Granules at 299.
All right, let's move on then and discuss Kajaria Ceramics as well, which came out with its quarterly performance. It's actually just flashing at the bottom of your screen. Now, after last year, where there was a last quarter where there was a disappointment in the volumes, where the profits as well contracted, this time around it's been an improvement. 108 crore rupee profit is what the company has delivered versus 96 crores just last year. Revenues as well have come in higher, so close to 1204 crores versus about 1102 crore rupees. The company's margins, though, that has been a bit disappointing at 14.6% versus 15%. Perhaps that's what the street is reading into, which is why you're not seeing a further scale up. And EBITDA has come in at about 176 crores versus 166 crore rupees. Keep an eye out on Kajaria as more details emerge from their quarterly performance.
Okay, and on that note, we are going to slip into a very short break, viewers. But as we slip into the break, Manish Sontala, Director and CIO at Motilal Oswal AMC, is extremely bullish on Zomato and that it will be a multi-bagger in the next 3-4 years. What more is he saying on ONDC and Zomato? Let's go across and listen in as we slip into the break.
As far as Zomato is one of the names which is basically catering to urban consumption. So against the crowd, basically I continue to remain extremely positive on Zomato and in fact the food delivery platform. And I'm one of those guys who really don't believe that ONDC is going to disrupt food delivery per se, because ONDC to my mind will disrupt one to many platforms. It could disrupt a Blinkit, which is basically one servicing many customers. But in the case of food delivery, Zomato, where you are servicing many to many, which is many restaurants, using your platform to cater to many customers. Out here, I think ONDC will have a challenge, and there is space for both Swiggy and Zomato out here. And I think, again, they have solved the profitability puzzle ever since the day of listing. No longer is it about negative EBITDA margins. EBITDA margins are going to be positive 5%. And even on a net PAT level, I would presume that, they would actually make net profits in the year fiscal 25-26 and EBITDA closer to 3,000 crores in that time frame. So excluding the cash value of the platform at 40,000 crores, that is what we got to understand. I think there is definite value and the stock is a multi-bagger 3-4 years down the line.